From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 19th, 2016. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Now, we are coming into the last 2 weeks of 2016. So as the market winds down for the holidays and liquidity begins to dry up, be sure that you are using appropriate risk management strategies in all trade setups. Okay, let's get started here on the USD CHF, the dollar franc. We're looking at the daily time frame. We're reaching multi-month resistance highs. In fact, almost back over a year ago now was the last time we saw these resistance highs being reached. So if we're looking to buy in the direction of the trend, momentum, sentiment that we've seen over the past several days, we're going to need it to pull back away from those highs. We don't want to buy at the highest high. Remember that old saying, buy low, sell high. You don't want to buy something at the highest high. You'd actually prefer it to go down a little bit, get away from the highest high to give you better risk-reward trade setup for any trades that you're looking to take. So we actually want to come down into support and not be directly at the resistance. Look back in the top left-hand corner of the chart, the black circle. We're at resistance, same as the right-hand side of the chart. You do see down at the very bottom of the chart, I do have a holdover trade from last week from the 1.01100 level. You can see that sitting about 150 pips of profit, locked in with the stop loss. It's the last remaining lot. Everything else was closed late last week. So if you're still in that, of course, you should be protecting profit. If not, we're looking for a new opportunity. Let's go ahead and zoom it in here on the daily time frame. And there we are at the top right-hand corner. Again, resistance high into the 1.0300 level. We have pulled back now a little bit down into the mid 0-200s. I think that's a good thing if we're looking to dive back into this currency pair. Take it down to the 4-hour time frame. So here we are. We've come back down into support. So if you're looking for a low risk, high reward opportunity to trade the dollar franc today, or really probably the first part of the week, we're looking at this purple shaded area. That is 1.0255 down to 0.245. Pretty minimal risk. Now, if it breaks down through there, I would suspect that the orange shaded area is your next spot for it to reach down towards the upper 1.0100, 0190 or so would be the top of that orange shaded area. So really at this point you just don't want it to break the purple shaded area. Now of course resistance is the blue zone. If we're going to see it go higher, it will need to break through the top of that, which is the 0.300 level. It needs to break through the top of that if we're going to see it go up. So if you're looking for a trade setup here on the dollar franc, this purple shaded area may be the spot you're looking for today. Very similar to what happened down here at the green shaded area where our current entry is, by the way, for the dollar franc. Take it over to the euro dollar, just the opposite. Of course, if you're looking at the downtrend, the black trend line, the fall that this currency pair has been in over the past couple of weeks, then you're looking for sells on rallies to resistance or breaks of support. But again, difficult to sell something at the bottom. So if you're going to sell it, you want it to go up, rally into resistance. This is actually something very similar to what we looked at late last week and traded. If you were here late last week, you know that we traded a short into the 1.0460 or so level. It went up, took me out, so I'm currently not in it. It went up and took me out at break even on the remaining position I had. So let's go ahead and 4-hour time frame. And again, late last week, let's zoom it in a couple times. Late last week, we took the sell into the yellow shaded area. It went down. We saw profit, came back up, took us out. So if you're looking to get into this one again, I think that the yellow zone obviously remains your opportunity here for the euro dollar. As close as possible. That's going to minimize your risk. Your risk, of course, at this point is that it breaks back above the yellow shaded area. And of course, we're going to target back down here towards the blue zone on any shorts that you decide to take for the euro dollar. But if you're going to do that, wait for it to get as close as possible, 104.60, maybe go up 25, 30 pips, then you get into it, gives you a better risk reward for the euro dollar. Take it over here to the GBPUSD. Now we are again into support. Look at the blue box back here on the left. You know that the yellow zone has been support, and not only there, you can zoom it in one more time. You can see the last 2 days of last week, the yellow zone was support. So we're challenging it again. Now, I don't want to assume that this is going to break. That's going to be the worst case scenario. You don't want to assume that it's going to get underneath that yellow zone and go down to the orange zone, because that's when you're going to get in trouble. You want the real deal breakout. So that's what I'll be looking for this first part of the week. A real deal breakout underneath the 123.90 level. That is the bottom of the yellow shaded area. If it doesn't break out, we might look for a bounce back up, but at least at this point, the bears are in control. You don't want to buy it while the bears are in control. If it does go back up, the green zone becomes your next resistance. So the main thing, breakdown of the 123.90 level, we'll be looking for the market to continue that bearish pressure down here. Let's take it down to the 4-hour time frame again. If you were going to sell this, obviously the green zone would have been the better place to do that, but since we didn't sell it at the green zone, if you didn't sell it there, the next thing you're looking for is the breakdown of the yellow zone and that support level for the pound dollar. Let's take it over here to the USDCAD. Late last week, we were studying this blue trend line. The market bounced for the second time, like it did here at the first red trend line. Second red trend line bounced, went back up. Let's go ahead and zoom it in so we can see that a little bit better. Black circle, bounce, bounce, went back up. So we see it here, bounce, went up. I don't know if we're going to make it back down here towards the blue trend line again, but definitely we're moving up right now, and I think that's the direction we want to focus in on. Take it down here, zoom it in one more time on the daily time frame. You look back here on the left-hand side between the blue and the orange shade area where the blue box is, just to the left-hand side. Blue box, resistance support between the orange and the blue shaded area. That's pretty much where we are right now. We might adjust the orange shaded area a little bit later in the trade room, so be sure to join us then. We might pull it down just a bit, but right now 1.334060 is the orange shaded area. The blue zone is right there at the 13400 level. So if it's going to continue to go higher, it needs to stay above the orange zone. Our target becomes the blue shaded area here, and of course if it can break above the blue shaded area, we'll look for the continuation of this upward rise that we're seeing. Any reversal back underneath the orange zone, probably looking for a pullback into the mid to low 1.32s for the USCAD. Moving on over to the US yen, again we're at the very highest high of the trend, or recently been at the very highest high of the trend. If you're going to go long, you always want it to pull back away from that high to give you better risk reward. So we see it pulling back a little bit today. Let's go ahead and zoom it in a couple of times here on the daily time frame. Kind of tough to see that, isn't it? Let's go ahead and take it down to the 4-hour time frame. There it is, pulling back down into the orange shaded area. We mentioned this late last week. The pink zone, the red circle where the market came back down, settled out for a couple of days there into the pink zone, and now that's a similar scenario that we have going on here at the orange shaded area. So as long as it's within and above that orange zone, we're watching for support and possible opportunities for this to go back up. The risk here, of course, is that it breaks down and goes lower. We have to be assured to note that we do have some significant news out of Japan, monetary policy information, rate news out of Japan coming up much later this evening for the U.S. So we'll have to keep an eye on that. That could change everything by tomorrow if there's any surprise changes with that monetary policy news coming up later out of Japan. But for right now, it's sitting at support. You don't want to sell it on top of support. Just take a look at that pink zone. I'm watching for opportunities maybe to go long in the direction of the trend, being sure to be aware of the news later on. AUDUSD moving down. It's a downtrend. We've been studying that for the past several weeks. The black trend line, the rise along the blue trend line, going short at the red trend line, and now significant profits made. Here's the remaining portion of the trade down here at the bottom. 74.85 was the sell, setting 215 pips. If we're going to see it continue to go down, look at the yellow zone right in the middle of the chart, yellow shaded area. You look back here where the black circle is, and you can see it found support at the yellow zone, finally broke it, went down to the orange zone. So that's what we'll be looking for today. Let's take it down to the 4-hour time frame. Again, the yellow zone obviously is your support. Let me zoom in one time. Let's get this where we can really get a good handle on it. Obviously, the yellow zone acting as your current support, so don't go short right now. You don't want to go short on top of support. The next things we're looking for, if we're looking for an opportunity here, is it either has to pull back to resistance, which obviously right now is the purple zone, or it will need to break through the yellow zone for a next trade op. So it either goes back up to resistance or breaks through support before we trade it again. I see no reason to go long at the current moment, just focusing in on looking for an opportunity to go short again on the USD. Let's take it over here to the NZD USD because it's a very similar situation. You see the remaining portion of last week's trade, 72.25 area, 280 pips. Phenomenal trade opportunity. Hopefully you were able to take advantage of it. We studied the market retesting underneath the blue trend line for several days before it finally started moving back down in our favor. Resistance, the orange shaded area. Zoom it in a little bit here, and you can see the orange shaded area, support, all the way back here on the left-hand side. Let me zoom it over just a bit. The black box, support, black circle back here on the left. You see support right before there. That's what we're breaking through right now. So if we're going to go short, obviously it makes it more sense to go short into resistance. Let's go ahead and take it down to the 4-hour time frame. Obviously, the orange shaded area already, since market open, has been the opportunity to go short. If you didn't get in there, I still think you want to wait for it to get as close as possible there, because your risk is right now above the orange shaded area. Stop loss would be above the orange zone if you decide to go short. Getting pretty close to the support, which is the green shaded area, into the 69.15, 6900 level. So at this point, if you're going to go short, the best opportunity would be a rally back towards 68.77,000. 69.77,000. That's the orange shaded area. So rally back there becomes a better opportunity to go short for risk reward wise, targeting the green zone or lower. No reason, at least at this point, to go long on the New Zealand dollar for this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.